A hot Winston and Felix here, and everything has just changed. And that's an overused phrase, but it seriously just has. Markets will not be the same again for years to come. There are two, possibly three reasons for that, and I think you need to understand it so you can make really good investment decisions over the next 12 months. And that's really our mission here, isn't it, Winston, to help you with that. So let me break it down for you and explain those steps in hopefully simple terms, right? Ask me questions down below. Now, before we get into that, no matter what happens, you can always make money in the market. That's a total given, right? 2022, we made what did we make? 126%. Last year, 105%. This year so far, we're up, 16, 17, 18%. Always return on capital employed. And we do that in 2 hours a week. And I actually teach that, and I will teach it for free to 500 people next week, Tuesday evening. So if you want to learn the 3 steps that Winston and I employ and how we do that in 2 hours a week and how we automate everything. We literally set up a trade, we forget about it. Everything is automated. We never think about taking profits or managing the losses again because it is already done. Come and join me at felixfriendsalog/webinar. It's completely free. Take about an hour and a half and you'll really learn what we do. More dogs coming? No. German Shepherd just walked through and Winston tried to go for his neck, which wasn't a very smart move, was it, Winston? He was like, well, he could have been scary. He wasn't. He was a big fluff bear. Anyway, let's get into it. I've got my notes. All right, so what's just changed? Number one, the Swissies have cut their interest rates. First central bank in the world to do so. We expect the US and Europe to follow. The Fed basically said, we're going to get 3 rate cuts this year. Could be 2, maybe if they're a bit more cautious. But Powell has also said, all that money shredding, I'm going to stop it. Because what they've been doing the last year and a half, at the same time as raising interest rates, they've been reducing the amount of money out there. Now, in fairness, he did print 40% of all the dollars in existence in the space of a year because he really enjoyed the money printer. So he's been taking away very little of that. But by acknowledging publicly, I'm not going to shred all the money I created. What does that mean? Well, it's glorious for us. Why? Because where did that money go? Into property, into stocks, into bonds. Money goes where it makes the highest return. That's just what happens because most people with lots of money understand that money needs to make money for them. So money does not come from working. Money comes from money. That's actually how it should work. And that's, again, one of the reasons I'd love you to understand how trading works so you can make more money out of your money, right? So, come and learn with us. And that's important. So that's positive, right? You're thinking, Felix, this is an optimistic video on a Sunday. That never happens. Well, 2 flies in the ointment. One is commercial real estate. And I've been droning on about this for about 1.5 years, saying this bubble is going to burst. And it is. There were 2 buildings in San Francisco last week that got sold. They were worth $700 million 3 years ago. How much are they worth now? Any guesses? $0. The buyer paid nothing for them. And who are these buyers? Well, the Blackstone CEO came out and said, it's time to pick up some bargains. And Blackstones are sort of the cockroaches of the cockroaches. And they will benefit by buying these discounted assets. So the question then is, who's the bag holder? There's always a bag holder, right? When something goes down, 80, 100% in value. Well, the bag holder are banks. You might be thinking, well, I'm not too worried about JP Morgan. It's not JP Morgan. It's the small and regional banks, of course, the ones with the idiotic management. And what does that mean? Well, it means one very simple thing. And I'll pop a chart on the screen here for you, which Bloomberg put out from government data. And they're saying, depending on how many mortgages are not paid back by commercial real estate people, the banks will fail. A certain number of banks will fail. Now, right now, 6% of commercial mortgages are non-performing, which is a polite way for saying they haven't got any money and they can't pay, they haven't got a tenant. So 6%, how many banks will fail? About 100 plus. And you might be thinking, no, Felix, never happens. Banks don't fail in the US. Well, we had 4 major ones fail last year. These might not be major ones, they might be small ones, but nevertheless, it's important because the market will get a little spooked by it. And say you're a SoFi investor, yeah, your stock will probably get pretty volatile during that period, but also at the same time, the Fed will have to act and they will have to properly stop the money printing, maybe even start printing some more money. That's what they did last year. And rate cuts will happen faster. So it's in a way the perfect predictable black swan event why rates are going to come down and the government's going to bail us out once again. So that isn't so bad now, is it? Well, what about the next one? Where did Winston go? Oh, he's in the shade here behind me. Winston says, did you see the golden cross on the US dollar? And you're saying, the what? Well, people who trade foreign exchange, the US dollar, look at stock charts. That's pretty much the main thing they go on. And there are two moving average lines there. And when they cross, it's called a golden cross, everybody sees it as a very, very big bullish signal. And therefore the dollar is expected to go up. Now, why is the dollar going up? Well, because maybe other countries will cut rates faster, like the Swissies. China's just devalued their currency, makes their exports cheaper, stuff like that, right? So that pushes the dollar up. What's the problem with that? Last time this happened, 2021, dollar went up, stock market went down. Why did the stock market go down? If you look at the big tech companies who've been holding up this rally, like your Microsoft, 40% of their customers are overseas, Europeans, Japanese, everywhere in the world. So they pay in their local currency. But Microsoft is a US business. So they have to take the euros and the yen and whatever, and they have to convert it back to dollars. Now, with a stronger dollar, they get less dollars for that money. What does that mean? It means, well, actually, their revenue's down. Their profits are down, even though they sold the same thing, just because of the currency difference. And that means, oh, there's some two little cute dogs coming. And that means, Winston, any interest? No? No interest? What about in the stick? So that means be careful. When the dollar goes up, it's bad for stocks. So watch out for that, right? That's definitely something coming up. As I say, we can make money anyway, just like small little French bulldogs are always full of energy, right? No matter what happens. Winston's a bit overheated this morning. We walked up the mountain, so he's like, I will chew my stick. So yeah, take that into account. Those are things you need to understand. I hope this provides you a little bit of clarity on what's about to happen. It's very predictable, which also means we can make money out of it in a rather predictable fashion. So come and join me on Tuesday, felixfrenzelog/webinar, and Winston will teach you our 3 rules about how we trade, how we automate it, how we do it in a couple of hours a week. Super beginner friendly. We assume zero knowledge. And I wish you a glorious weekend. I hope your weather is as wonderful as ours here. And we're going to find a few more dog friends once this guy's cooled down a bit. And have a beautiful day. Thanks for tuning in. Don't believe a frickin' word the government tells you on that front, or the medical industry, or the food industry. That's what I would say to you. And Google it. Google still allows to put that stuff out. So yeah, it looks expensive. So really what I would do is I would really listen to that earnings call.